So hello everyone, welcome back to the channel. And as you all are aware that we are running this series of top 300 MCQs, and in this particular series we have till now covered all the subjects except for the Companies Act 2013, and today we have the last part of accounts. So today we are going to end with the accounts part, and then we are going to start with the Companies Act 2013 as well from the tomorrow, right? So today we are going to again do 10 more questions for the accounts, and in this 10 questions you have to attempt each and every question, and let me know in the chat section ki how many marks you have scored after the end of the session. Okay? So we are going to start with our today's class, but before that let me know in the chat section everyone ki if my voice is clear to you and audio is also clear to you. Let me know everyone in the chat section first of all. Hello everyone, good evening. So let me know in the chat section if everything is good to go, my voice is clear to you and my video is also clear to you. Okay, so let's move ahead and do your best. So the first question we have is, okay, everyone is saying everything is good. So first question we have is, business transactions are usually evidenced by an appropriate document, right? And the question is asking you, which of the following is not an appropriate document? See, in the options, what do you have? You have first option as cash memo. So what is this cash memo? See, when you purchase anything from the seller, right, in the cash, then seller is going to give you cash memo, right? It can give you cash memo. So for the small firms, they use small firm generally use cash memo, and if they are big firms, then they can use the invoices as well, right? So these are the proper and legal evidence, you can say vouchers, to basically authenticate the business transactions, right? Sales bills are again same as the invoice, right? Check, yeah, check is also one of the type of the voucher which can authenticate the business transaction. So first four options are you have eliminated these four options. Now it says which of the following is not. So the correct option would be none of the above, E. So let me check in the chat section. Okay, so none of you are correct because you think it check. I can see Pallavi and Dhaval has given me D answer. See, check is also an appropriate document through which auditor identifies कि this transaction is valid or not. It is a type of voucher itself. Don't think कि check is not a voucher or check is not a appropriate document which can't be used as the evidence of a business transaction. It can be used, right, in the auditing. Okay, so the option would be, correct answer would be option number E. Chalo, good. Second question we have is, the nature of financial accounting is what? And I will wait for your answers. ठीक है? First option is historical, second option is forward looking, third option is analytical, D option is social, E is none of the above. You have to choose the most appropriate answer in case of financial accounting. So the nature of financial accounting is what? Historical, forward looking, analytical, social. So tell me everyone in the chat section and let me check who all are correct here. Okay, so Dhaval is correct and Mansi is also correct and Pallavi is also correct. Okay, that's nice. So everyone is correct here. So the most appropriate answer would be historical. Basically, what is financial accounting? Financial accounting is recording the transaction, isn't it? And it is preparing the balance sheet, cash flow, and as well as the profit loss account based on the financial year, past financial year, isn't it? So it is recording, it is the record of the transaction that has been occurred in the past. More appropriate will be historical. See, if in the question it has been asked you the nature of management accounting, then what should have been the answer? See, management accounting is something that is forward looking, but the financial accounting is historical. Okay, so I can see most of you are correct here, so option number A would be correct. Okay, that's good. Let's come to the fourth question. We have done, no, third question. Let's come to the third question. Third question says, accounting standard in India are issued by whom? So let me know in the chat section everyone. Is it issued by a central government or state government, RBI, or the ICI, that is Institute of Chartered Accountants of India, or the Cost Accountants of India? It is issued by whom? Not notified. I am asking you, it is issued by whom, right? Okay, so I have started to get the answers as I can see. Okay, all of you are correct. That's very good. So it is issued by the Institute of Chartered Accountants of India. Okay, let's reverse the question. Let's modify the question. Suppose it says accounting standards, or I can say Indian accounting standards to be more precise, are notified by whom? ठीक है, are notified by whom? Then what should be the answer? I'm not giving you option. Just tell me who notifies the Indian accounting standards, if anyone knows. Okay, chalo, let me give you the option as well. First option will be A will be MCA, B will be ICAI, C will be NFRA. Tell me, only three options you have. Tell me if the question would have been like this, Indian accounting standards are notified by which entity? Okay, so I have started to get the answers. Yes, so it is notified by the Ministry of Corporate Affairs. Very, very good. Chalo. Now let's move to the fourth question. As per SEBI regulation, as per the SEBI regulations, dash percentage of the issued capital must be subscribed. Minimum issued capital must be subscribed is what? If this limit is not breached, then obviously the company has to return all the money, right? They can't allot any share if this percentage of issued capital is not subscribed. So 35%, 45%, 50%, 70% or 90%. Let me check in the chat section. Yes, so the whole is absolutely correct here. 90% is the limit as per the SEBI regulation that must be subscribed. Okay, so option number E would be correct here. Very, very good. Question number 5. Expenses on a foreign tour to purchase a machinery is what? So now what is happening here? I have told you and I have discussed this thing, the difference between capital expenditure and revenue expenditure multiple times with you all, isn't it? So I have told you, if you buy a machinery for your business, till all the expenses you have occurred to bring that machinery into the desired location and condition as intended by the management to be able to use it, all the expenses must be included in the cost of the machinery. That must be included in the capital expenditure, right? So the question is saying expenses on a foreign tour to purchase the machinery. So is it capital expenditure or revenue expenditure? Let me check in the chat section. Okay, so Pallavi is saying yeah, capital expenditure. Dhaval is also saying yeah, everyone, and Mansi is also saying this. That's very good. So it would be capital expenditure. Absolutely correct. So I'm really happy to see this key. In today's class, most of you are correct in each and every question. That's very good. Okay. Chalo. Now question number 6 says, financial position of a business is ascertained on the basis of what? Pick out the most appropriate answer. Financial position. We are talking about the financial position of the business. It is ascertained on the basis of record prepared under bookkeeping process, trial balance sheet, all of the above, none of the above. What would be the most appropriate answer here? Financial position is ascertained by which? Okay, so I have started to get the answers, and yes, again everyone is correct. So the correct option would be balance sheet. So basically balance sheet is going to provide you the financial position of the business at a particular point of time. That is, it gives you the asset and liabilities, right? Okay, that's very nice. Let's move to the 7th question of the day. Important question it is. Heavy advertising to launch a new product is a dash. Heavy advertising to launch a new product. Is it a capital expenditure, revenue expenditure, deferred revenue expenditure, both A and B and both A and C? So we know what is capital expenditure. I have given a shortcut about that as well. Ki whatever is going to in the shortcut, you can remember it like this. Ki whenever there is an entry which is going to basically impact your balance sheet in the form of asset, you can say you are directly buying an asset, right? And it is going to benefit you for a longer duration of time, and the expenditure is not so frequent or recurring in nature, right? So then it is called capital expenditure. But in the case of revenue expenditure, the expenses which are very much recurring in nature, right, and which are very usual for the company, and that is also going to impact the profit and loss statement. That is what our revenue expenditure is. Now let's understand what is this deferred revenue expenditure. So see, deferred revenue expenditures are those revenue expenditures that is going to benefit you for the longer duration of time, just like the capital expenditure, but you are not purchasing some actual or real asset. You are not purchasing some real asset, right? Therefore, it is not included in the capital expenditure. Though the nature of the deferred revenue expenditure is in such a way that it is going to benefit you for a longer duration of time, but on the other hand, it is not giving you any actual or real asset, right? Like we have the heavy advertising. So I have basically received the answers from all of you, but I need to explain each and every point now. So deferred revenue expenditure, I have told you ki the expenditure like heavy advertising, it is going to benefit you for the longer duration of time, but again it is not going to fetch you any real asset. So how do we show this deferred revenue expenditure? We are going to show this on the asset side definitely, but each year we are going to recognize some part of it. Each year we are going to recognize some part of it in the profit and loss statement. So basically we are doing what? We are not recognizing all of our expenditure in a single year. What we are doing? We are distributing the expenditure in different time period. We are segregating the total expenditure in different time periods. Okay? Why? Because this expenditure is going to give us benefit for the longer duration of time, right? So the correct option would be option number C, and I can see most of you are correct here. That's very good. So heavy advertising to launch a new product is your deferred revenue expenditure, not the capital expenditure, not the revenue expenditure. Okay, let's move to the 8th question of the day. That says assets in the balance sheet are shown at cost less depreciation rather than their replacement cost, right? So why we are not showing our asset in the replacement cost, and instead of showing it at the replacement cost, we are showing it at the cost less depreciation? Why we are doing so? Which accounting principle we are following? Or I can say, as per which accounting principle we are doing so? As per going concern, materiality, cost, periodicity, or the matching? See, let's understand first of all going concern. Going concern says ki your business is going to be there in a foreseeable future. You're not going to shut down your business. This is what going concern says, and you have to prepare your accounts as per the going concern only, right? So as you can see ki your business is going to be continued for a foreseeable future, you are going to record your asset not on the replacement cost. You are going to show your asset on the replacement cost only when you think that we are going to shut down our business. Then only you can do that. But if you are thinking to continue your business, or as per the going concern, you are going to continue your business for a foreseeable future, you are going to show your assets at the cost only, less depreciation. Why? Because see, you know this asset is going to give us benefit for the multiple years that are going to come ahead, right? So therefore you are not going to show it at the replacement cost. So the correct option would be going concern. So here I think most of you are incorrect, right? Most of you are incorrect here, I guess. Yeah, chalo, let's read out the other option as well. Now see, everyone look at the question very carefully. It is saying asset in the balance sheet. First of all, it is saying balance sheet, asset in the balance sheet. So if you say periodicity or cost, you might be wrong here. Okay? And apart from showing it at cost, if the question had been ki assets in the balance sheet are shown at cost less depreciation, only this much, then the answer would have been cost. But look at the question very carefully. It says rather than their replacement cost. So the keyword here is this only. It says, it is asking you why we are not showing it at the replacement cost. That's why the answer should not be cost, right? It should be going concern, not the materiality. So what is materiality? Materiality basically says whatever is material in nature, that has to be recorded in the financial records, right? Cost, you all know. Periodicity talks about the accounting period for which accounting transaction must be done. Matching principle says whatever revenue you have generated in a particular accounting period, the expenses related to those revenue must be matched and must be recorded in this particular accounting period only. So this is what your matching principle is. Now the correct option would be going concern. I have told you why as well. Okay, everyone is clear. Now let's move to the 9th question. So we have done 8th, yeah. So let's move to the 9th question. Now I will wait for your answers here. Question says capital redemption reserve can be utilized for what? Capital redemption reserve can be utilized for what? See, first of all, let me tell you why we basically prepare this capital redemption reserve. So what happens now, when we have the preference shares and when we have to redeem them, redeem means, see, we have issued preference shares and we have got the money. Redemption means now we are taking back our preference certificates and we are giving back them the money. Okay, so we are redeeming it. So when we redeem our preference share, so we generally prepare capital redemption reserve. Okay, the question is asking you, in what scenarios this capital redemption reserve, that is CRR, can be used? Can it be used in declaration of dividend? Can it be used in writing of capital losses? Or it might be used in issue of fully paid up bonus shares? Or the option should be all of the above or none of the above. Let me check in the chat section. Yeah, very good, Mansi. When preference shares are redeemed, then we prepare the capital redemption reserve. Tell me the answer to this question. Okay, Mansi has given me the answer. Yes, Pallavi also, Dhaval also, and every one of you is correct here. Yes. So capital redemption reserve, that is CRR, can be utilized while issuing the fully paid up bonus share, and I'm really happy to see that today you all are correct. Okay, so for the issuance of fully paid up bonus share, we can use the capital redemption reserve. It's a type of capital reserve, right? And capital reserve have certain uses. You can't use these capital reserve as the free reserve, so it won't be used for declaration of dividend, right? And not for writing of capital losses as well. So it would be C. Correct option would be C, and every one of you is correct here. Very, very good. Chalo. Let's move to the question number 10, that says Miss Ram and Sons Limited is, what type of account it is? Natural person account, artificial personal account, representative personal account, and real account. And very easy question. I think everyone must be correct here. Natural person, artificial personal account, representative personal account, and real account. XYZ Limited paid wages of rupees 8,000 for erection of machinery. Now you have to tell me the journal entry for the transaction. Okay, if you know right now, you can type in the chat section, but I will not say that this is correct or not. Okay, you have to give me the journal entry, and if you need time, you can take your time and give me the answer in the comment section. Okay, okay, so that's all for today's class, and we are going to meet tomorrow same time for the Companies Act 2013. So we are going to revise tomorrow our Companies Act 2013. Everyone is clear? So we have to meet exactly at same time, that is 4 PM tomorrow, to discuss most important MCQs for the Companies Act 2013. Okay, everyone? Chalo. Thank you, everyone. Tata, bye bye. Take care. Okay.